Hey, it's David here, CEO and founder of the Freedom Founders Mastermind community. Unless you've been living under a rock, you know and are very aware that the ravages of inflation are very much affecting our economy today. This is something that's new. In fact, we haven't seen any serious inflation for about 40 years. 1982 was when we were at a peak after about 15, 16, 17 years of what was called stagflation back from mid-60s, 1965 to about 1982. When at that time, we had the resolve in our country for a Federal Reserve Chairman, Paul Volcker, to come in and raise interest rates all the way up to 21%, which caused a major recession in our country, but it did bring down inflation. Now, today, we have different reasons why we're seeing the fueling of inflation. I won't go into those details. Some may be transitory, but I think the big issue is once we have a trend, like inflation ramping back up again, even if some of the issues are temporary in nature, supply chain, for example, which may resolve at some time, the fact that we have a trend heading this way, it's hard to pull it back. And I don't think we have the same political resolve that we had back in the early 80s to do what Paul Volcker did, that is raise interest rates as high as he did. This country couldn't take it. The national debt that this country carries today couldn't take rates going up much more than a couple of points, but we're in real trouble. So what does that mean? I believe that even though there could be a correction, we could see a little bit of pulling back of inflation on a temporary basis. I think the long game, the long run for the next decade, probably decades ahead, is going to be inflation. It's the only viable way that a country has to really deal with the high debt this country has. There's no other way. You can't tax enough billionaires and trillionaires to pay the debt, and the government certainly is not going to default on the debt. That would be the worst case. It's not politically viable. So what do? You inflate or you devalue the currency. So what's happening right now? So how do you protect yourself? How do you protect your freedom and your security for your family with this new inflationary environment, which most people, unless you're my age or older, you don't really know what it feels like to have high inflation or relatively high inflation, which last month, October, year over year, was 6.2%, highest rate of inflation in 31 years. It's not going to get better. I think the long-term trend is it's going up. Here's how you deal with it. You've got to be invested in equities, ownership of real assets. I'm not a big fan, as you probably know, of the stock market. I'm not saying you can't make some plays in the stock market and potentially have some equities that will go up, but it's trickier to do, my opinion. I like tangible assets like real businesses or real estate. Real businesses where you have the ability in that business to pass on the higher costs of doing business to your buyers, to your clients, to your customers, to your patients. Now, if you're in an industry where you're having margin compression because of outside forces like insurance and consolidation, you're not in a good place there, because you're going to get beat up by the increased costs of doing business. And if you can't raise your fees, or you're in a position where you don't feel like you can raise your fees, not a good place to be. But a real business that can pass on the costs to their customers and do so on a relative basis, you can keep up with it. I love real estate because real estate's always had the advantage of being an asset class that does keep pace with inflation. Both on the valuation side, the actual asset price will go up, as does the cash flow, the dividend. That's really what I want. I want the dividend. I want the cash flow. So as we go down the road and we have inflation running at 5-6%, in 10 years at a 6% inflation rate, the purchasing power of a dollar goes down by 40%. That's in 10 years, 40%. But if I invested in assets that keep up with inflation, then at least I keep par. Big problem for a lot of people that are thinking about getting out of business or retiring out and taking that nest egg, whatever they have is, they've got several fronts against them. They've got higher taxes coming at us right now, right? And then you have the inflation factor. And then you also have a volatile economy where, depending upon where you have your assets invested, like the volatile stock market, you could take hits three different ways. Volatility of the stock market taking a big drop, a 30, 40, 50% drop, like we see about every 6 to 8 years. We're long in the tooth on this bull run cycle. You can see taxation chipping away more and more at your assets. And finally, inflation. So investing in real assets, tangible assets, real estate's my favorite. Or if you have a business that you can continue to run and want to run and operate it, that's another offset to inflation. I love the real estate side, and that's what we do in Freedom Founders. We are able to procure and curate high degree of very professional returns for our investors. If you're not in that game, it would behoove you to learn something about orchestrating your future financial means instead of just putting everything in the market with a money manager who probably doesn't have any more experience than you do in what to do in an inflationary environment. It's up to you to orchestrate your financial future. Good luck. And remember, always stay focused on your freedom. I'll see you next time.